If you're holding exactly 18,427 HBAR right now, this video isn't about hype or unrealistic moon targets. It's about understanding what you actually own, how Hedera fits into the broader market, and what a realistic outcome for this position could look like by 2026. HBAR is one of those assets that quietly keeps building while most people argue over short-term price action. And that makes it interesting, especially for holders who think in years, not weeks. At the time of recording, HBAR is trading at approximately 12 cents per token, giving it a market cap of around $5.2 billion. With those numbers in mind, a holding of 18,427 HBAR is currently worth about $2,211. That's not a life-changing amount yet, but it's also not insignificant. The real question is whether Hedera's technology, adoption, and positioning are strong enough to meaningfully increase that value by 2026. To answer that, we need to go deeper than just price charts. We need to talk about what Hedera actually is, why enterprises are paying attention to it, and what kind of growth is realistically possible from a $5.2 billion valuation. Hedera is fundamentally different from many other digital assets. It doesn't rely on traditional blockchain architecture. Instead, it uses a hash graph consensus mechanism, which allows for extremely fast transaction speeds, low and predictable fees, and high throughput. This design choice isn't about being trendy. It's about solving problems that large-scale users actually care about, like performance, cost stability, and security. One of Hedera's biggest strengths is consistency. Transactions settle quickly. Fees remain low regardless of network congestion, and the system is designed to handle enterprise-level workloads. For companies that need reliable infrastructure rather than speculative upside, that matters a lot. Another critical factor is governance. Hedera is governed by a council made up of major global organizations across different industries. This governance model gives Hedera a level of credibility and stability that many other networks struggle to achieve. It also reduces the risk of sudden rule changes or chaotic decision-making, which is something institutions tend to avoid. Now, none of this guarantees price appreciation on its own. Technology doesn't automatically equal value. Price ultimately comes from demand for the token itself. That's where usage becomes important. HBAR is used to pay for transactions on the Hedera network. As more applications, enterprises, and services run on Hedera, demand for HBAR increases. Unlike purely speculative assets, there is a direct connection between network usage and token demand. That doesn't mean price goes up in a straight line, but it does mean there's a fundamental mechanism supporting long-term growth. Let's look at the supply side. HBAR has a fixed maximum supply of 50 billion tokens, with a significant portion already in circulation. This means price growth will primarily depend on increasing demand rather than artificial scarcity narratives. At a 12 cents price, the market cap of $5.2 billion reflects moderate adoption expectations, not extreme optimism. So what would need to happen for HBAR to grow meaningfully by 2026? The first scenario is the conservative one. In this case, Hedera continues to grow steadily, but without explosive adoption. Enterprise usage expands gradually, developer activity remains healthy, and the broader market stays relatively cautious. In this environment, HBAR could reasonably trade in the 18 cents to 25 cents range by 2026. At 18 cents per HBAR, your 18,427 tokens would be worth about $3,317. At 25 cents, they would be worth roughly $4,607. This scenario doesn't rely on massive hype or sudden shifts. It assumes Hedera does what it's already doing, just at a slightly larger scale. Next is the moderate growth scenario. This assumes Hedera gains stronger recognition as a go-to network for enterprise-grade applications, with increased transaction volume and broader awareness among investors. In this case, HBAR could realistically reach the 40 cents to 60 cents range by 2026. At 40 cents, your 18,427 HBAR would be worth about $7,371. At 60 cents, that number jumps to $11,056. For this to happen, Hedera's market cap would need to grow to roughly $20 to $30 billion. That's a significant increase, but it's not unreasonable if adoption continues and market conditions improve. This scenario reflects a world where Hedera is no longer seen as underrated or quiet, but as a recognized infrastructure layer used by real businesses at scale. In that environment, investor confidence tends to follow usage, not the other way around. Now let's talk about the aggressive scenario, which is where things get more speculative but still worth discussing. This assumes Hedera becomes one of the dominant enterprise-focused networks, with large transaction volumes, high-profile integrations, and strong developer momentum. It also assumes a favorable market environment where capital flows back into high-quality infrastructure projects. In this case, HBAR could potentially reach 80 cents to $1 by 2026. At 80 cents, your 18,427 HBAR would be worth approximately $14,741. At $1, that value becomes $18,427. A $1 HBAR would imply a market cap of around $50 billion. That's a major milestone and would require Hedera to be firmly established as a core piece of digital infrastructure. This isn't a scenario driven by retail hype alone. It would require sustained real-world usage and institutional confidence. It's important to be realistic here. While this scenario isn't impossible, it's not something to assume as a base case. It's a high-end outcome that depends on multiple factors aligning over the next couple of years. One thing that often works in Hedera's favor is time. Enterprise adoption moves slowly, but once systems are integrated, they tend to stick around. Companies don't rebuild their infrastructure every year. If Hedera becomes embedded in real-world systems, the value accrues gradually and persistently. Another factor to consider is competition. Hedera isn't alone in targeting enterprise use cases. However, its combination of performance, governance, and predictable costs gives it a unique positioning. If it continues to differentiate itself clearly, it doesn't need to dominate the entire market to succeed. Capturing specific niches at scale can be enough to drive meaningful value. For someone holding 18,427 HBAR, the question isn't whether HBAR can do something extreme. It's whether the potential upside justifies the patience required. Even a move from 12 cents to 40 cents represents more than a 3x increase. For an asset already valued at over $5 billion, that's a substantial gain. It's also worth remembering that volatility is part of the journey. HBAR has gone through periods of excitement followed by long consolidations. Anyone holding through to 2026 needs to be comfortable with uneven progress and periods where nothing seems to happen. So, where does this leave us? At current prices, 18,427 HBAR is worth about $2,211. By 2026, a realistic range based on adoption and market conditions puts that value somewhere between $3,300 on the conservative end and $11,000 or more in a strong growth scenario. Extreme outcomes could push it higher, but those should be treated as bonuses, not expectations. The key takeaway is this: Hedera isn't built for hype cycles. It's built for long-term infrastructure use. That means its value may grow more slowly than flashy projects, but it also means the foundation is stronger. If you're holding 18,427 HBAR, you're not betting on quick wins. You're betting on steady adoption, real usage, and the idea that utility eventually gets priced in. As always, this is not financial advice. It's a realistic breakdown based on current data, adoption trends, and market structure. The future will depend on execution, market sentiment, and how much value Hedera is able to capture over time. But if you're willing to think beyond short-term noise and look ahead to 2026, HBAR remains one of the more interesting long-term infrastructure plays to watch.